Stephen, welcome. And do you see signs of froth out there at all?
Well, I certainly see signs that housing prices are rising very rapidly, and I know that that's caused a lot of concern for some of the bears out there who are thinking that this has gone too far, too fast. But no, I actually don't think so. And I think, in fact, quite the contrary. We're at the early stages of really a monumental rise in home prices, and that we think it's going to be tremendous for the builders, particularly for their margins. And I think we're actually pretty much on the early end of this.
Wow. Wait, so let's talk about this for a second. You think we're on the early end of a monumental rise in home prices? I mean, that people are already starting to get a little bit of sticker shock.
Well, sure. I think that there's a little bit of a fundamental misunderstanding about what's going on. Like, for example, I've fielded a lot of emails from clients this week suggesting that the builders have pushed prices too much without recognizing the fact that I think that builders are actually price takers. The price of homes is set in the existing market, which outnumber new homes by about 5 to 1. And if you look in the existing home market, the reason why prices are going up is because demand's good, sure, but the real thing is that supply is incredibly constrained. You have never seen a level of tightness in the existing home market of homes for sale as you see today. And when there's a shortage, well, guess what? Nothing sells like a shortage and home prices go up. Meanwhile, on the new side, the builders also have construction constraints, labor constraints, land constraints, and things like that. So really, when you have good demand and you have just incredibly tight supply, home prices go up.
All right, so let's get tactical, Stephen, and talk about your favorite picks here and how much upside they have.
You know, the interesting thing is when you're at periods like this, major inflection points in the cycle, and when you're at the early stage of a big ramp in price and margins, you're going to make money in all the builders. And as a result, we've adjusted our ratings to reflect that. We have a buy on every builder that we cover. Our return potentials generally range from about 35% to 70%. Our top pick right now would be Pulte Homes. But frankly, I don't think you're going to be unhappy with the returns you get from any of the builders, the public builders that we cover right now.
And it's just amazing after the run-up that we've seen this year. You think there's still that much room to grow.
Shepard Smith here. Thanks for watching CNBC on YouTube.